Ladies and gentlemen, a first set of panel discussion on balancing innovation and security, how to build a future-ready, risk-resilient business. So let's get to know more details, insights on this topic because we have a session chairman, Shri B.S. Shantaraju, chairman of the board and independent director, Re-Sustainability Limited, to moderate the session. Let's put your hands together and please welcome him on stage with a huge round of applause. Come on, everybody. Our first panelist, Mr. Harihara Vinayakaran Natarajan, Chief Architect, Wipro Technologies, to please come over on stage to join in the first set of panel discussion. I take the opportunity to invite our next panelist, Mr. Rakesh Ranjan, Chief Digital Officer, Reserve Bank Innovation Hub. A round of applause. Next, Professor Padmini Srinivasan, Chairperson, Center for Corporate Governance and Sustainability, Indian Institute of Management, Bangalore. Put our hands together, everybody. And last but not the least, can we have a round of applause for Mr. Venkat Pillai, CFO and Board Member, Plan.net TechNext. A round of applause once again for all our panelists, and I am sure this set of panel discussion is going to be really amazing and interesting. Now I would like to hand over to the session chairman to please take it further from here. Over to Shantaraju. Over to you, sir. You'll come there? All right.
I will prefer to stand and talk.
Yeah. Thank you, sir.
Good afternoon, ladies and gentlemen. Good afternoon. Okay, one heartening thing is that the today's session started 20 minutes late, but it only ended 10 minutes late. That means the previous group has recovered 10 minutes. And all my distinguished CAs and the policy advocates, if they sit together and calculate the GDP growth we lost because of the lost time in starting meeting, the last time in the traffic, it will be very mind-boggling to show that where we should be investing our money and energy. I think what I'm going to talk about it is that my distinguished panelists are going to talk. They have a lot of experience. I must tell you that I belong to a dinosaur era. I retired in 2016, and I was the CFO. I became CFO in 1992. And I would like to bring what happens in the board process from 1992 till today. I've seen a dramatic change which happens in the board processes. In 1992, when I was a young man, I became a CFO for a very well-known multinational company. I was just 35 then. The board meetings used to be 2 hours. It was a well-known listed company. And audit committee meeting used to be 1 hour. What do we discuss in the audit committee meeting? The typical mundane balance sheet, all the compliances. Board meeting, same audit committee, then all the mundane legal compliances. This is how even the well-run multinational companies used to conduct this board process. Very well-known, listed company. In the last 10 years, things have dramatically changed. I worked for 9 years as a CFO of a very large company and 17 years as a CEO of a very large, diversified companies like Indus Tower, Delhi Airport. I was the first CEO after it was privatized, led the entire transformations. Prior to that, I was the managing director for a listed company, Gujarat Gas. Then it was the subsidiary of British Gas in India. All good companies I'm talking about it, not mundane one. In the last 10 years, including now I'm the advisory board member and the advisor to Brookfield, CDP, KKR, very well marquee names. Then what runs in the board process? It has dramatically changed, ladies and gentlemen. In the last 10 years, board generally runs for minimum 4 hours. Gone are the days of the 2 hour. Every quarter, minimum 4 hours. Typically, apart from that, we spent a substantial amount of time, even as a chairman of the Re-Sustainability, I spent a substantial amount of time going and visiting the operations at the grassroots level. This happens everywhere. Then we spend a lot of time in the strategy. So typically what happens, I'll tell you about, then I go down to the subcommittee level. I will take exactly 9 minutes. At the board level, the focus, roughly about 25% of the time goes in compliances, books of accounts. 75% of the time goes on growth. Then the process which leads to the growth, that is strategic processes, operational processes, people processes. And substantially they run around innovation and the risk management. We always say that if you get the strategic process, 75% strategy right, I think you are done with it. But you have to get your operations processes right, at least 85%. But the substantial time, your growth is determined by your people processes. At the board, we put at least we have to get the people process right for the 90-95%. Otherwise, your growth is the biggest casualty. The talent decides whether you grow or you don't grow. But around that comes, we also discuss substantially on the risk management part of it, the innovation, okay, this part of it. But there's one item which last 5 years is taking a board time substantially, which is sustainability. Trust me, 10 years back we did not talk about it. 1992, 93, 94, forget about it. We did not even know what does it mean sustainability. We did not know. But today, sustainability is taking a very important discussion. This is how the today's boards are basically grappling with the major issues. When it comes to people process, substantially we talk about the talent management, the succession planning, hyper management. Do we have a people capability to ensure that the company proceeds for the next 5 years? There's a substantial discussion which happens. We don't know how much discussion we spend on that. We go to the level of the skip level to meet the people to see that do we have a talent to proceed for the next stage. This is how it happens. As a result, what happens is that I sit in various audit committees, various NRCs, and the CSR committees. Audit committee today, good company audit committee lasts for minimum 2 hours, sometimes even 2.5 hours. So much so that we put the audit committee meeting a day prior to the board meeting. A day prior to the board meeting. Audit committee meeting substantially 2.5 hours if you take, I'll tell you, the compliances case gets over in half an hour discussion. Another half an hour to 45 minutes into the the financial statement, cash flow, assets, liability, financial covenants which were given to the bankers. In my days, I'll tell you, financial covenant, nobody bothered about it. Today, we do think financial covenants very seriously. But another 1.5 hours or so minimum goes on the risk management. You'll be surprised at how much we discuss in the audit committee about the cyber security. And I know the companies, because of the cyber security lapses, they have been held into ransom. Their business suffered. I know that people are paid by bitcoins. So, cyber security and the risk management takes a very substantial part of it. Risk management includes the global geopolitical risk. One of the companies where I'm a chairman, we got the business in India, 59 locations, then Middle East, 7 locations, then Singapore and US. For us, the geopolitical changes are substantially discussed in the audit committee meetings. So this is how the whole proceeding is changing when you're looking at the Indian boardroom and the subcommittees. Next subcommittee, most important subcommittee is the NRC. I don't know why they still calling it a NRC. What is that? Nomination and Remuneration Committee. See, governments, some of these fellows, they can't think beyond this resolution passing of appointing the directors and key management personnel. But the NRC's agenda has changed dramatically. Generally, we spend at least 2 hours in NRC. NRC's discussion is all about succession planning, talent management, hyper management, salary management, compensation strategy, okay? Then bench strength. Do we have an adequate bench strength to ensure that our growth will not suffer? These are the discussions, substantially happens in the NRC. But overarching discussion is a culture. If you don't focus on the culture, it's very unlikely that you will sustain your growth. Do you have a properly engaged employees? Unless your employees are satisfied, you cannot have a satisfied customer. In this world, you take it from me. You cannot have a dissatisfied employee and satisfied customer. It doesn't work. It is possible that you got a satisfied customer with a satisfied employees and dissatisfied customer. Yes, that happens. But to have a satisfied customer, you have to have satisfied employees. The substantial NRC discussion is around employee engagement program, talent management. We discuss from cradle to grave how people are treated. When I say grave, even after an employee resigns and goes out, does that individual go out as an ambassador or does he go out as a critic? That substantially differentiates our culture. These are the kind of the discussions which happens in the NRC. Entire CSR discussion revolves around the society. On top of that is that how much sustainability practices we are imbibing in our company. And sustainability practices, benchmarking the sustainability, gap analysis of the sustainability. This is how the board processes are substantially changing. I'm sure that my distinguished colleagues, both in this session and the next session, will throw light on this one. Ladies and gentlemen, I've taken exactly 8 minutes. Thank you very much. Now I request Mr. Hariharan to lead the next round of discussion, please. Hariharan, thank you very much. Welcome you here. I think whatever you feel comfortable, do it. Either you can sit here or you can take the either way.
Is this audible? I think, yeah, fine. Okay. Hi, good afternoon. The topic I'd like to look at is balancing innovation and security. So this is, I do not know why we want to look at as two opposite things, right? Innovation and security are not necessarily two different things. You need to have, security doesn't happen by, is not like an add-on. It's not like I design my product and after like 90% of the product is done, security is not something that works, at least not in today's age and time. It doesn't work like that. So take that notion away saying, I have a product now and then I will have security at some point of time. Typically it doesn't happen. It is like, you need to have security from the top. You need not implement it maybe from the beginning. Maybe you don't have to have like a compliant security from day one. But can I plug it in at some point is something that you need to look at. There was an incident about 6 months back or maybe slightly recently where people talked about a restaurant QR code. So there is like, I'll skip the name of the companies. There's like a fairly famous, well-known venture-funded company, and they run the business of running these restaurant QR code tables. I don't know, a lot of these restaurants have these QR code tables. You order the QR code and then the order goes back to the kitchen. People order back. Standard stuff. And they're doing fairly good business. They had about 30% of the market and stuff like that. Recently, a cybersecurity researcher figured out that the API calls that go through, basically the call that go from the phone back to the restaurant kitchen and things like that, were completely like unencrypted, which meant that anybody who had a browser and anybody who had some basic knowledge of tools, when you go to Netscape or Firefox or whatever there and then inspect the transaction that happened, people would be able to modify. So this shows that security is not a add-on part of it. Basically what it meant is that I could go modify your order. I sit in the restaurant or I sit anywhere else, I know what your table is, and if you order, say, vanilla ice cream, I can go and make it chocolate. This is like a very naive example of what I'm talking. There can a lot more things people do. Once you have the order, what can I do with the order and things like that is fairly common. All that it shows you is that people have a tendency to, there's like a lot of, somebody talked of saying, can I do 90% of sharpening the tools and 10% launch? At some point of time, we kind of flip the order. We say, now I launch first because you have this talk of, can I fail fast? So I launch this first and then look at security. Doesn't happen. Unless you start looking at, we talked about culture, we talked about a lot of things. Security needs to be a thought that comes through it. As part of an operational thing, security needs to be part of what is there. Whatever be the business that you do. Cyber security more important, but whatever be the distance to do, these are things that would come back to it. I remember an incident in my childhood. My father was part of the electricity board, and typical when transformers have been erected and things like that. One day there was like a huge fire in one of the substations, and then the whole process burned down, the entire thing burned down. There was like postmortem report done, why was it burned down, the systems that are there. I mean, because all these transformers have a pipe, there's like all these sensors were there, and there is fire, water pours down, the transformers are supposed to when whatever, all this was supposed to be done, but nothing happened. The whole transformer, the whole substation was burned out. It was figured out that the pipes that were supposed to have water coming through that, when there's like a smoke alarm detected, was all filled with packing material, which meant that people did not even unpack it. I mean, nobody tested whether water goes through it and things like that. So water was blocked. So water was supposed to come. There was like all blocked packing material. That's it. So the same concept happens in a lot of our day-to-day operation that we do. I mean, people take backups. How many of the backups are ensured that you can be restored? I do not know. I mean, I've seen that in so often. I mean, typically internal audit that happens, right? First question that I ask is, has anybody restored the backup? Everybody does a backup, right? I mean, there's database backup, so many things that are done. You go ask a question saying, have you restored the data? Can you say, if this data is restored, can you restore it back? Say, yesterday's data, can it be done? I don't know. I mean, if you run companies, if you're part of your IT operations, first question, go back and ask people saying, have you done that? And it will work is not a good answer for a lot of things. Can it work? Have you seen it work? I think is an answer. And I don't know how many people do that, right? I mean, this all comes back to the culture, right? I think that is where it comes down. Will it work? Yes. As an IT professional, I've coded, it should work. Absolutely, yes. Have you seen the tape working? Have you seen the backup there? Has it worked through it? So these are all standard questions that you need to. So when I meant security, all these are security. I mean, you talk of ransomware incidents. Why would a ransomware incident occur? I mean, a lot of businesses are hit by ransomware because you now say, okay, now I have a business that is taken down. It cannot be restored back. If I have backup, can I restore the backup? I mean, obviously lose some data. I will lose, I mean, depending on whether I take the backup 3 days back, 5 days back, a month back, I can still restore back my data to level where something is there. For example, I take a backup every week. So if I can restore back last week's data, I've lost this week's data, which I think is bad, but still it is like good enough. And I don't have to lose my business. But reality is a lot of people do not have restoration. I mean, scripts don't occur. I mean, these are things that are there. Standard, I don't know how many of you have seen these restorations that are there. Doesn't happen. Something is missing, right? You do not know operating system versions are missing, database backups are missing. If the database backup is there, people do not know how to restore the backup. So these are all things that are there. I mean, do I classify these as cyber security incidences? I would say, I mean, cyber, I think the word covers a lot of these things. So if you are looking at an operational culture, these are things that I would say are things that have to be there. So bring back a culture that says, has it been done? Trust, but verify. Verify that it has been done. Can I take a backup, verify that this has been done? Is something like that. Have you seen the non-happy path working? Happy path is very clear, right? Things are there. I have an internet connection. I walk into the store. Wow experience, right? I have an internet connection. Everything else works. But if there is no internet connection, how does it happen? I mean, I remember some time back we were doing this for one of the states in India where we did a medical insurance coverage and things like that. And a lot of this data was based on the fact that I go type in my Aadhaar card, the number is there, I go contact the whole Aadhaar thing and then get the download details, etc., etc., and all that. The first question somebody asks is, what happens if the internet goes down? You don't have an answer, right? If the internet goes down, it means that I will not have treatment for the patient. That's not acceptable, right? That's certainly not. Can it now be a card? Can I have local verification? I mean, whatever. You have backups that are there. So these are things that you'd want to look for it. Look for the non-happy path of where you'd want to do. I think that's a very important part. People don't look at these things, kind of things that are there. People look at saying, is there a happy path? Works through that. Before I conclude, 2 things I'd like to say. I mean, I don't know how many people read books, but I think it's a good app to look at. So there's a book called Black Swan by Talib. And I don't know if people have heard of Talib. Can you raise hands? Is that something people have heard? Okay, some people have done. I think it's a fairly interesting read. I think take a look at it. I mean, I think these books are interesting. There's a book called Black Swan. Internet, Google, if you search for it, you can find Black Swan. Fairly well-known book that is there. One of the things Talib talks about in the book is that about saying that how events are unpredictable events occur. I mean, things, for example, take the 9/11 incident or things like that. I mean, you cannot predict. These are all once in a lifetime event that happens. Say, for example, you have the stock market crash 1929. Multiple things that we can think of, so many things that you can talk of. Are these things that are predicted? No. But the moment some of these events happen, the human mind goes back and says, these happens because of XYZ. I mean, you kind of try to bring back a story that your human mind can understand. I mean, typically, what somebody call like a sound bite, where you have like a sound bite, an attention span of like what people can understand in say 1 minute. These are fairly complex systems, so trying to condense systems like this in a 10-minute or in a 2-minute, 3-minute thing is not going to happen. So a lot of us try to rationalize a lot of failures that happen. I mean, why does some incident happen? Okay, my entire machine broke down. Why does the machine break down? Because the rat came, cut the powers. Those things, very common. I don't know how many of you seen these kind of things that are there. Like data center power goes down, and if you have your data backed up in something that is done in-house, these are more common, right? Disks fail, things like that. So people try to rationalize some of these things saying it doesn't occur. I mean, does it occur once in, say, maybe 10 years? It occurred, so it doesn't occur in the next 9 years. Those kind of things we try to rationalize our mind. So that is typically not something that is it. The other thing that I'd like to look at is another book. There's a book called How Complex Systems Fail. There's a book by Robin Cook, I think. There's like a look for this, How Complex Systems Fail. It talks about the human body as an example. He was a doctor. He talks about the human body as an example and says there are multiple systems and says how each system, it talks about the human body and says the body doesn't fail like that. People's hands get cut off, but still the body works. Legs get cut off, still works. And then how do you design systems like that? So this is like a good example of how do you design a system. Things fail, but still the system is designed for some part of it. These are all appendages that are there, but that works through that. So, and it also tells you where these warning systems occur. Your human body gives warning systems, fairly well known. Like as a doctor, people talk of a lot of things that are there. In a system that you use for, these are warning systems that occur. You should be able to see. For example, suddenly you log in the morning and then you can say sometimes you see a black screen and you see a blue screen that comes back, say doesn't back. And what do most of us do? Reset the button. It typically comes most of the time. And if you happen it more often, then maybe you should look at it. Is it a warning sign for something else? What happens if the machine fails? I think that's something that you have to look for. These are interesting books to look at it. Look at it from a point of view saying that, is this something that I'd want to apply to my cyber security point of view? Where does this come through that? Because, we talked of AI, how AI is more important. A lot of AI is based on data. And data, again, is like the new oil. People talk of what I can do with data, what is that you can do. And if your data is not correct, you come to completely wrong conclusions. You see what is happening on the ground and what your data tells are two different things. And a lot of us now say, I trust the data rather than people on the ground. Why do you think the data is correct? I don't know. That's like the thing that is there. You'd want to look. You say my data says something and my on-ground says something. Is people believe data rather than try to question where data comes from. So it's very important to keep your data in mind, keep the security there, and that's where you look at. So these are two books that I found are fairly interesting from a non-technical point of view to look at how do you look at a bigger picture and where do you run through that. And so that's where I looked at. So maybe, I don't know if I've reached my time, but we'll come back to any questions that are there and then I'll start with anything else that is after. Thank you.
Thank you, Hariharan. Thank you very much. I think Hariharan dealt with a very complex subject, innovation and security. And the way you explained with such a common man's language, so I'm very impressed with you, Hariharan. Thank you very much. Just when it comes to innovation, innovation is a way of life. But what is important is that innovation is that you fail fast. Don't prolong too long when your chance of success is low. The importance part of the leaders is to bring the curtain when the things are going wrongly. Support it as long as you know there's a chance of recovery. I think it's a very important part. As long as my experience as a CEO for 17 long years, I think that the chances of innovation success is 2 out of 5. So I think more people prolong too long and waste the original time and the money. I think the success rate is low, but fail fast. Wherever chance is success, invest heavily. Okay, thank you very much, Hariharan. Very impressive talk. Now I would like to request Rakesh. Rakesh is going to deal with a very difficult subject, financial innovation and financial risk. Not the easy subject so easily, though it is written simply. Would like to listen to your experience. Thank you very much, Rakesh.
Good morning, everyone. I got a very bad throat. I was in Delhi for 3 days, so please pardon me for that. Just came today morning. So I'll try to be clear and not sound very hoarse, okay? But yeah, that's about Delhi and how we are, right? Anyway, so thanks SOCHM and CPA for having me on this in this session and share my thoughts. My team gave me a write-up on this, but I said let me dump it and just speak my mind, okay? So with that, let me get started. So I represent Reserve Bank Innovation Hub, which is a wholly owned subsidiary of RBI. Now, what we do is essentially we look at innovations in the financial space, right? How we can change the way financial services are designed, delivered, how they're even consumed, are they safe, all right? Whether we are able to reduce the cost of operations, we are able to improve the efficiency, productivity, so on and so forth, right? So that's our day job. People would ask us, being RBI, how are you doing this? Yeah, we are saying we are not RBI, we are RBIH, okay? And I is the keyword there. We are Reserve Bank Innovation Hub, okay? So technology, as you know, is pretty, I would say, a key nowadays, right? Everything is tied to technology. And so what has changed in last 10, 15 years, right? If I just take you through that. Just 10 years ago, what was our smartphone penetration or internet access? Just 20% people had a smartphone, and we had internet speeds of approximately 2 Mbps, not even that, right? You would remember that. In 10 years, we have almost hit 75% smartphone penetration, and internet is, no one even questions, it is given. That even on Go, you can watch a movie. It is, that is India, and that too at the dirt cheap rates. So that way, India is pretty, in an advanced state compared to many countries. Secondly, if you see the demography of India, we are a very young country. 65% people are below 40 years, right? Thirdly, if you see the financial inclusion that's happening in the country, and RBI is playing a key role there, we are at 64.2, okay, we rate 64.2 on 100, a scale of 0 to 100. Now that means we are doing pretty good on consuming digital financial services, I mean the access to services, the quality of services, and the usage of services. So that's a score which RBI maintains and publishes every year. And as of March 2024, we are at 64.2, which is up from 50. That was 2021, I think that was the rating at that point of time. So we are doing pretty good that way. I think the future looks good. Now, if you look at how government is, chipping in with their strategies, with the support they are providing. Look at the JAM Trinity, what you must be hearing about the JAM, Jan Dhan, Aadhaar, and mobile, right? Now that's expanded to JAM plus UPI plus ULI. ULI, have you heard? Unified Lending Interface. Okay, that's a new kid on the block, okay? And so the idea is to digitalize the lending journeys which the banks run, okay? So that's another initiative which is helping a lot. India Stack powers a lot of things, and Aadhaar, has been the backbone of these initiatives. Look at the availability of equity funding. There's so much equity funding available in the market now. You have an idea and you find people, who are takers of that idea. That's the reason why fintechs are, so many fintechs are around, right? Who are coming in with new age ideas, modern solutions using technology across AI, blockchain, and could be, anything, even quantum, right? So all this put together, what is happening? Technology has become a part of our life now, okay? Can you imagine living without your phone even for a minute? At least I don't. The morning when I wake up, I need my phone to, check a lot of things, right? So that's how it is, right? Everybody, I think, would agree with that. We consume services with a phone, okay? Now, technology is a double-edged sword, right? You would agree. It might solve a problem, but create new problems, right? And new problems are the risks that we're talking about, okay? If I solve a problem, say, of credit underwriting using data, now a lot of data is being analyzed, right? So the risk with respect to data privacy, data security, or even the fair or indiscriminate use of data, the risk is there, right? How do we prevent that? Because every data that is being shared is of an individual or of a entity. That data could be sensitive, okay? We do have a DPDP Act which was enacted last year, and it has helped protect the personal data, so to speak, right? So that the personal data which is sensitive in nature is not being misused by entities for commercial reasons or for other reasons as well, okay? So the risk definitely is there. But can we still ignore technology? I think we cannot, because technology really helps in improving the outreach of services, knowing your customer better, using low-cost methods to solve your long-standing problems, right? Making sure that you do a better service design, right? Are you able to make your services frictionless? Okay, by removing some of the non-performing parts of the processes, digitalizing them, looking at the self-service component through mobile. I can give an example to you. So, in the context of ULI, I was part of the project, and I really feel proud about that. This Kisan Credit Card scheme, right? You must have heard about that, which is the working capital given to the farmers, right? Now, as per the guidelines of RBI, up to 1.6 lakhs, there is no collateral required. Believe me, it used to take 4 to 6 weeks, even 8 weeks, for a bank to disburse even a loan as small as 1.6 lakhs. Now, why was that happening? Because the processes were very manual in nature, paper-based. A touch point was required, a human being was a touch point for the farmer, right, from the bank, a bank official. A visit was required. We did a review of the entire process. We found there are 9 parts to it, and of which 1 part can be removed, others can be automated. And you will not believe we could bring down that 6 weeks to 5 minutes. Can you imagine a loan being disbursed in less than 5 minutes in a remote village of India? So that's about our technology. So that's what I'm saying. A bank, any financial institution can't really ignore technology now. We are in that state, okay? Because it solves many problems, and since everybody is part of one ecosystem, right? It's a connected world, right? It's not just about one bank in a silo. It's like multiple institutions, RBI, governments are there, right? People also expect a lot of, such solutions. Put together, every provider needs to look at the risk angle of it, okay? While there are benefits of technology, but look at the risk. As I said earlier, data is the biggest risk. Cybersecurity, right? That's another, like Hariharan said. It is a part of your process, service design actually. Unless you ensure cybersecurity, your data is at risk, okay? Every data that is there with you, you are the custodian, and you have to ensure the safety of that data, even if it is on a standalone computer in your office. It has to be secured by some means. Either you lock your drives, you do whatever, but it has to be secured. So cybersecurity is a pretty big topic which Hariharan has covered pretty well. But yes, the risk around that has to be managed, okay? Because these risks will bring disrepute to a banking service provider, can even make a financial system unstable. What if a large fraud takes place? There's always a risk of financial system getting destabilized, which no one would want, right? Because that is something that brings dispute to the country itself, right? As a nation, we have to ensure our financial system stands very strong, okay? And make sure that as a regulator, RBI is aware of what is going on, who is doing what, how can we prevent, how can we predict a problem, can we fix, can we put, can we preempt an attack, some kind of failure, right? There are many things that go on, okay? So as an ecosystem, the financial institutions, the regulator, the governments, even the customers also need to be really clear about what they are doing, what they're consuming, what they're delivering, how it's being delivered, and the safety of it. So there are plenty of things that we always look for, yeah. So with that, I'll pause here and take questions if you permit, yeah. But that's how it is about technology and risk. Thank you so much.
Thank you, Rakesh. Thanks a lot. Please. Now I will request Professor Padmini Srinivasan to speak about the impact of the governance and financial reporting on the business sustainability. Thank you, ma'am.
Good afternoon, and thanks to ASSOCHAM and CPA Australia for inviting me. The topic is very interesting and also very relevant in today's context. And most important is I come from an educational institution, so frameworks are very important for me. And therefore, understanding why we are doing what we are doing. So I will start with that basics about financial reporting, not taking too much of time on that, but why it is important to look at financial reporting and the risk of financial reporting today. If you look at broadly, what is important in any economy, apart from, of course, the monetary market, we also have the capital market that is very, very important for driving growth in any economy or any country. And if you want this economy to grow, and if you want the stock markets and the capital markets to grow, you need a very, very strong reporting system, because information is the key to any kind of growth. And having a very strong information system in terms of reporting is very important. And lack of information will create some kind of asymmetry. There are people who have information and there are people who don't have information. And this asymmetry will ultimately create what we call in academic world as Lemon's problem. And this Lemon's problem ultimately will ensure that the stock markets fail or the capital markets fail. And therefore, information becomes very important, at least from a very, very macro perspective, it's very important. Now, coming to an organization, why is information important? You talk about lack of information that creates some kind of uncertainty in investors. I don't have information, I don't know what to do. So there's some kind of uncertainty in my decision-making process. So uncertainty creates risk. And risk means expectations from the investors will become very high. The return that they are expecting from organization becomes very high. The moment you say returns expectation is high, there is a risk for the organization because the cost of capital becomes high. And therefore, the reporting and the, how transparent you are becomes very, very important. So both from a macro perspective and from a micro perspective, that is individual organization perspective, reporting becomes very important. And today, if you look at reporting has become very complex. And this complexity is arisen because of complex business models. And how do we ensure that these business models are reported correctly? At the same time, you look at regulators, regulations like accounting standards and so on. They have to keep in time with the business models. And therefore, understanding these regulations, how do we apply the regulations in a manner in which you capture the business model in a fair way is very important. So you have regulations, you have accounting rules and standards and so on. And then you also have choices for the company, how they will apply these accounting rules and standards. So this is where the entire risk starts. So when you look at financial reporting risk, how accurately you report, how do you capture, all the transactions, business transactions in a fair manner? How do you interpret the accounting rules, the accounting standards and so on? That is becoming the major part of risk for any CFO or any organization. And when you look at the risk, why do these risks arise? And I put 3 or 4 aspects of this risk in terms of financial reporting. One, of course, the business model itself. With complexity in financial transactions, financial markets, for example, you talk about futures and options and other complex transactions. India still, we are not there at that level, but if you look at a developed economy, They have all kinds of crazy, complex transactions, financial transactions that they have. How do you capture these transactions? Second is mergers and acquisitions. This is another area where there is a lot of activities going around. How do you capture these mergers and acquisitions? That has created certain kinds of risks. And the globalization, companies are not just in one country, they are there across the world. And the rules of each country is also very different. That creates another set of risk. And, most companies, although we are technologically savvy, but still there are areas which has not been integrated into the system, and which leads to a lot of omission, which leads to a lot of mistakes, misstatements in the financial statements, creating a lot of risk in the system and what you are reporting. So what happens in all these cases, there's a lot of risks that are there, which somehow we have to capture and see how to mitigate such risks. So this is where it is important, and I'm quite glad that you spoke about the board and what they are looking at in terms of risk. My own experience looking at the annual report where we are talking about risk is very interesting. If I look at, my research says, 10 years back when we looked at risk management and what companies reported, even at the height of, a lot of development that were happening, some companies wrote, we don't have any risk at all in these particular areas. And it turned out, a few years down the line, these were the major risks, and we have to see where these companies are. This company particularly was in telecom sector, and they said, we don't have any, competition, we don't have any risk from private players. And today you see these companies are no longer in existence. So that's the kind of risk management that they were doing in terms of their business strategy and other aspects. And when you come to also risk, and when you talk about reporting, this is again based on my research. We are talking about ESG risk today, and when you talk about environment, sustainability, etc., I don't even have to go 10 years back, even 6 years back. In my report, I had interviewed almost 50 sustainability practitioners in organizations, large companies, and I asked them, what are the sustainable practices that you're having, and how do you plan to go forward looking at this ESG piece and so on? The answer was, where is the money? Who will pay for it? Will the customer pay for your ESG practices? We don't want to use plastic, agreed, but any other product has a cost to it. How do we look at, who's going to pay for this, and so on. So, but there is a complete shift from this mentality. Today, when you look at ESG, every organization, like you mentioned, talks about environment, sustainability, and so on. So nobody can be immune from, what changes and developments are happening around the world, around the globe, and some of it we are also personally experiencing, whether you talk about climate change or other aspects. So when you talk about financial reporting and we are talking about capturing all these risks, there has been a lot of gaps in this area, and therefore, looking at where these gaps are, what are the risks becomes important, particularly from a financial angle and so on. And broadly, like other speakers have pointed out, people, processes, and system. These three things become very important. And how you look at each of these people, process, system from a risk angle becomes very important. Whether you have trained people, do you know how they can interpret the accounting rules, see how they can implement, whatever the accounting standards and rules are. So that is one important aspect. Then you look at the processes. What kind of processes do they have? What do they follow? That is where the corporate culture comes into place, and so on. So that is another piece that we are looking at. And third, of course, today you are looking at technology. And technology has a big role to play in financial reporting, and also to look at risk management and so on. So I will stop with this brief view of looking at financial reporting, risks, and how we look at it from a governance point of view, with the last point that if you look at the past, for example, companies take strategy, they have their strategic decision, etc., implementation, but sometimes when they go wrong, and do they report that? Do they take any action and see what it is? But most of the cases that we have seen in the past, whether it is Enron, WorldCom, our own Satyam, or you look at ILFS and others, who have failed in the past, the first place of, whatever management they want to do, as I would call it, starts with the books. And it all starts with cooking the books, okay? And therefore, that kind of risk is very important, and how we address, from a governance angle, how do we address this aspect of reporting and having transparent reporting becomes very important. So with that brief, I'll just stop here. Thank you.
Thank you, madam. I think like all professors, she was so precise, so good in her eloquent way in which she presented the matter. Thank you very much because you talked about the telecom operators, the risk perception, and they were my customers when I was in the telecom industry. And one of the important things for those who make a decision about the customer, please keep in mind, it is equally important to say who are not your customers. Most of the time, you chase mindlessly in a B2B business to some customers. Later, you pay very heavy prices. For some of those customers who said who are not here, when I said I will not do business with them, my board criticized me like mad. And I said I will not do business with these customers because I'm not convinced that they are going to survive in this hyper-competitive market, which is going to become. So anyway, fortunately, I protected my business by not doing business with them. Thank you very much, madam, for bringing those things. Now, coming to our next speaker, Venkat Pillai, and looking forward to a speech because I lived your life. Okay, thank you very much. It's a very difficult life of a CFO's life. Welcome, my dear friend, and you are going to talk about the business innovation and how to support that and how do you mitigate the risk in the business innovation and the cost part of it. Thank you, Venkat. Welcome.
Hello, am I audible? Yeah. Respected ASSOCHAM chairman, respected co-speakers and colleagues who have come for this seminar. I essentially will talk about innovation and business resilience in terms of how a CFO can support, how the finance organization can support the innovation. So essentially, I'll start with how do you manage the balance innovation with sustainable growth. So you have to necessarily invest into those growth areas and look at the financial impact and then apply your resources strategically so that you reap the benefits in balancing the sustainable growth. As for example, I would talk about the pricing strategy. So if you look at the prisoner's dilemma, how many of you know the prisoner's dilemma in game theory? So a prisoner's dilemma is that two prisoners were put in two opposite rooms, and they were said that if one person confesses, that person will go free, and the other person, if he confesses also, the other person will go free. So, but if both the person confesses, it is suboptimal because the sentence will be there for. But if both of the persons stay quiet, so what happens is it will be the most optimal structure. But the human psychology doesn't permit so. So we use the game theory concept in pricing the model. So you have at various price points what is the financial impact. So you look at the financial impact and then decide upon which projects to go for. So you support innovation that way. The second pillar I would talk about is the artificial intelligence which comes into the picture. See, there was a compliant economy. I echo the speakers talking about cybersecurity as the number one priority. Most of the board, cybersecurity is the number one priority. It talks about the audit committee chairman, everyone is a bit bothered about cybersecurity. Now, when the artificial intelligence comes, 2002, we had these Enron went bust. It brought down Arthur Andersen, one of the top elite firms, also down. The essential thing was, the madam said about cooking the books. So one of the things which happened there was cooking the books. So we were at that particular point in time in a compliant economy. The Sarbanes-Oxley in 2002 was enacted. So it legislated something called internal controls, which was a very noble concept at that particular point in time. So when it enacted that, the company started following a compliant economy. So the business was taking a back seat. The CFOs started funneling money into compliances. So the compliances was the primary target for the CFOs. So then we moved on from there to an attention economy. The second is the attention economy. So then we started doing PowerPoints, we started doing the predictive analytics, we started doing flexible budgeting to target the business, to support the business. So if you see, if in the corporate, last 25 years I'm in the corporate, the function called internal controls moved to a business controls function. We became a business enabler. So we started enabling. So from a compliant economy, we moved to an attention economy. We started focusing on the business, started attentively focusing on the business. Moving further ahead, we now are looking at the intent economy, the intention. What is the intention? The customer has got various whims and fancies. That is where the artificial intelligence, which again comes into the picture. So we enable the attention economy, from the attention economy to the intention economy, using artificial intelligence. So artificial intelligence will give you a whole lot of, it will take the various, in megapixels, the web, from a web to a web crawler, understand the preferences of the customer and cater to his requirement. So this is the stage we are in. So the third stage would be looking at the various matrices. So gone are the days when I look at only the ROI. Now I need to look at the customer engagement, net promoter score. All of these I need to see. I should not be forgetting about my compliant economy. Though I'm saying there are various stages in moving, I still echo the internal control organization. The committee of sponsoring organization of the Treadway Commission is the authority on internal controls. So if I do internal controls, I need to have an ethical climate. Like the eminent speakers talked about the culture. There is a quote from Peter Drucker which says, culture eats strategy for breakfast. So how much ever you do innovate, if you don't have an ethical culture comes from tone at the top. So it comes right from the top, the management, they have to drill down by accounting policies, various policies, they drill down, they have an architecture, they control, they communicate, they supervise, they do risk assessment. The speakers again talked about risk assessment. So what is a risk assessment? You need to look at the impact as well as the frequency of occurrences. See, everything revolves around transactions, events, and conditions. And you add probability into it. Transaction, events, conditions. This is again straight from our accounting standards, but the word moves around transactions, events, and conditions. Now you plug in the probability. So the probability is judgmental, mind you. So when you start putting the probability into these factors, you get into an accounting reporting, like Madam talked about financial reporting. You get a robust financial reporting. It will stand to reason sometimes. You may have to probably, because your judgment may be different from the auditor's judgment. So CFO will have to probably walk the tightrope walk, but certainly not cooking the books. So you move from that. You look at the URM framework. You mix now the new 2017 COSO, the Committee of Sponsoring Organizations, have put in the strategy into an object setting. So looking at strategy, building into an object setting, looking at the performance, evaluate your performance, bring it into the ERM, the enterprise risk management framework, and you have a win-win situation. So you use all this, the three pillars, you will start achieving. It's like this now. If there are flip sides to artificial intelligence, like we can probably look at blockchain. Blockchain has got transparency, but it lacks scalability. It may cover up your privacy, like one of the speakers talked about DPP, the privacy norms. GDPR is much more stringent. GDPR talks about associate companies. So from GDPR, if you are a company incorporated the EU Union, and if they set up shop in India, they necessarily have to comply with the GDPR norms, right? So that apart from, you need to follow your local norms. Local norms talks about personal data. When you start outsourcing payroll to different people, it becomes a sort of a risk, a big risk for you. So have you taken care of that risk? As a board member, as a finance CFO, have you taken care of this? So how do you delve all into this? It's a mirage of items. So try to synchronize everything into a sustainable framework. Madam talked about frameworks. We always go so frameworks. We follow the process. Now 5% of your revenue goes in the Association of Certified Fraud Examiners, of which I am a member, proud member. They say 5% of the revenue is lost towards fraud. So what are you doing for that? How does predictive analytics, how does AI help you? You have to start doing a fraud risk assessment and do which is preventive in nature. Go back to your work table, do all that. So it is always a tightrope between business resilience and innovation, and that's how you dovetail all the within the framework you work towards achieving the end objective. That's pretty much my. Thank you so much.
Thank you. Thank you, Venkat. And I'm extremely happy that I'm not a CFO. Because the days when I was the CFO, life was very simple. And today, if I had been a CFO, I would have failed miserably. So, very eloquently, he explained the issues he faces as a CFO. Thank you very much. I think, first of all, I must compliment all the members. Yeah, we stuck to our time. But still, I will have a time only for the 4 questions. Okay? Any questions, please address your question and address to whom the respondent also, please your name. Please, go ahead, gentlemen. There. Yeah. Yeah, we can hear. You ask one question, please. A second question, I'll come later. Yeah, okay, okay. Go ahead.
Has a system been put in place right now to prevent a Satyam? The second is in terms of the internal security, the employees itself creating a security fraud. For example, if you're a bank employee, you could actually be taking money from somebody into your account, right? So security with respect to top management issues, security with respect to internal employees.
Maybe I'll request Padmini Madam, because she has done a lot of research around it. Maybe that she can throw some light. Ma'am.
You want to speak? Yeah. See, fraud risk is very, very unique in the sense it requires a lot of elements in a fraud. For example, it's not one person who's doing it. Fraud is always with understanding. We need 3 elements for fraud. One is we have to, there has to be an opportunity and there has to be, a need for doing that kind of an activity. And of course, there is also a rationalization that is happening. And today, beyond the 3, we also need capability, competence to do that kind of fraud. So that is where this technology becomes important. And having robust technology, internal controls, etc., becomes important. And that is my short answer to your question. It requires a lot of other aspects to be in place.
Thank you. Thank you, ma'am.
Yeah.
Thank you. Next question, please. Yeah.
So myself, Mitesh Khandelwal. Right now, I'm the MSME National Vice President. So we are taking over 10,000 members of MSMEs. So my question to Madam that she was talking about the ESG. And today, whenever I'm going for a lot of session, we always listen ESG to implement for the company. For a bigger company can be done, but a smaller company prospects how you will be implemented, because there is a lot of cost transactions are there. So how that will be mitigated and how they can avail such facilities for ESG, for social governance and all these things. I want to highlight this point.
See, environment sustainability, if you're looking at environment perspective, every company will be affected. The only question is who should start? Should we leave it to the government? Should we leave it to a disaster to happen to start? So at least for small companies and MSMEs, I would say you start, at least you start. And look at smaller wins, whatever is low-hanging fruits, you start with that. You look at water, you look at electricity, you look at your own carbon footprint. You start with that, and once you start that, then it becomes as part of your DNA. So this is my experience, that at least you make a start, then automatically, you can scale up on these activities. And also to understand what is, sustainability, how it impacts, etc., is also another thing. You have that understanding. Where are all your carbon footprints, for example? Small things like carpooling or, taking public transport. Such small steps also would help in these companies to scale up to look to the next level. The other thing is now I'm also finding that in supply chain, to whoever they are supplying, not in terms of your regular customers, but if you're looking at to whom you're supplying to big companies, they are now insisting, no, unless you are ESG compliant, we will not go and we will not take you as our supplier. So somewhere from regulation, from, from your own, to whom you are supplying, etc., these pushes are coming. But there has to be a start. That's what I say. Just because certain companies are not following doesn't mean that we have to leave it to the government to mandate everything. But we should start with some small steps. This is my view on this.
Yes, I think it is a mindset about
Yeah.
the individual perspective, so it has to be implemented.
Thank you very much, dear. Just minute, I'll come to her first. There's no choice on the ESG practices. In fact, most of the companies, they're insisting their partners community, the vendor community to certify their ESG practices. In fact, they are going to do an audit. If you're not getting ready for that regime in another 2-3 years, you will remain small, you will not even become medium and forget about becoming a big. Okay, that's going to be the reality. Over to you, lady.
Yeah. Hi, sir. I've also been the president of MSME World Bangalore chapter, and I run my own company called Enscons into business transformation. Sir, my question on the crypto front, actually, what I had is India is not there yet on that front to accept that as a change which economy is expecting us to really move forward, right? And the technology shift, which is, already there, and government, and I mean, as such, the initiatives probably we'll have to probably speed it up, and in terms of how process, people, and technology shift can happen, and for the businesses to really, take that in effect on the transactional point of view. So if you could throw some.
Thank you very much. I mean, I'm having a very distinguished speaker. He would handle that. Rakesh.
Regarding crypto, I'll give a guarded response because I'm not representing RBI here. Okay. See, the point here is that crypto as such is not allowed in India for transactions, right? We don't have regulations around that. Okay. The primary reason being that crypto, let's say Bitcoin or any other, such coins currently, they are not backed by fiat currency, right? Which means your gold reserve or your other assets in the country, they're not backed by that. It's entirely a speculative currency where the value of currency would fluctuate basis not your economy but other factors. If Trump comes to power, Bitcoin will jump. Doesn't mean that India is doing well, right? So the point is, how do we, really measure, something against your economy, your assets, the way you are performing in the industries, right? Stock market. There's no basis, right? So crypto in the current form is not permitted in India as such, right? There's no regulation around it. But yeah, in future, things might change, we don't know. Yeah, but as of now, this is the situation, yeah. But yes, CBDC is one, you must have heard of CBDC, right? That's one attempt to digitalize rupee. We don't call it crypto. It's called digital rupee, okay? So that's in the format the same, but it is still backed by your fiat currency, okay? That's the reason why it has a certain, pegging against a certain asset of India, right? So that's about it, yeah. I hope I could answer your question.
Thank you. Over to you. Yeah.
Hello everyone, Shweta here. I'm from a communication agency, and firstly I wanted to thank all the dignitaries here for such an insightful conversation. And my question was to Rakesh sir. We noticed right now that there are some critical insights that came out of the conversation that we're having here, especially from the technology survey as well. Especially like how India is leading in terms of AI adoption as well. So just wanted to hear your perspective and insights on, what do you see the future and in general about the summit and the insights that were presented in the report.
Yeah, so I agree. I think India, as even presented by Mr. Gavan, India is doing pretty well in terms of AI adoption. See, the primary reason behind that is it's a vast country, okay? We may have thousands of banks, right? But population, the customers are same, right? I'm talking for financial sector basically, right? The population is same, right? You're the same market being served by all the providers, okay? How do we get an edge there, right? Some, small banks have limited coverage, in a district, a taluk, the cooperative banks typically, right? But large banks serve a wide population, right? So they need to really reinvent their services, reimagine how they, operate, okay? The operating model has to change. Also important is, can we do more with the data that a bank has? Can we know the customer better? Can we know the customer's behavior or the needs better, okay? For cross-selling, for improving your existing services. So AI plays a big role there. You have a lot of data with you. Take any bank, say SBI, any other large bank, amount of data they have, they represent the country actually, so to speak, right? So I can tell you what RBIH is doing. So we are also working on, a project with banks to identify the mule accounts. I don't know whether you understand what a mule account is. So mule accounts are the accounts typically used for frauds, okay? Now, those accounts, for example, I'm a laborer. I may have a Jan Dhan account, okay, like a no-frills account. Somebody may take it on rent from me, okay, my account, and perform, some fraudulent transactions, okay? That's a typical definition of a mule account. Now, what we are doing is using AI, machine learning and deep learning as well, to see whether we can identify the various patterns, the behaviors, okay, of people who are making a payment or receiving a payment, okay? Coupled with the behavior of the customer across other services they consume, okay, from the bank. How do we do it? We need data, right? Now, data from one bank is available, okay? We can run models, which is fine. It's pretty easy to understand. But remember, every bank has gone through evolution. And only in last few years that the data quality has improved. Prior to that, it is little, under question, okay? Now, what we are doing is, we are putting in data from various banks, not just one bank or multiple banks. Why? Avoid the biases which might exist in the data of one bank, okay? Or maybe the errors. They should not carry it over to the model, the fraud monitoring model. So AI adoption definitely is required to process that much of data, okay, to solve a lot of problems which are, I would say, impacting the stability of our economy, of our banking services, right? So and this is only going to grow further, okay, for fraud monitoring, for asset management, for giving very customized, personalized, wealth management services, even for cybersecurity, okay, this is very much important, right, to know the patterns. So, yeah, it's only going to, go up from here, yeah.
Thank you so
Thank you,
much, sir.
Rakesh. With that, we have to bring an end to this session. Personally, thank you very much for the ASSOCHAM for giving me this opportunity. And I got highly intellectually motivated by listening to the speakers and also the kind of questions and the answers. Thank you very much. Thanks a lot. Over to you, people.
Very much. Thank you so much for the wonderful and a very, very insightful session. I would like to thank each and everybody for making this session so interesting, by the way. And now it's time to appreciate by giving a memento. So I would like to invite Dr. Ashok Haldia on stage to please come and give the memento first to Shri B.S. Shantaraju. With a big round of applause, everybody. Let's put our hands together, everybody, and this is just amazing. Thank you so much, Shantaraju, for joining in. Next, I would request Sir to please hand over, to please give the memento to Mr. Harihara Natarajan. Thank you so much, sir. Now, I may request you to please give the memento to Mr. Rakesh Ranjan. Thank you so much, sir, for doing the honors. And now I may request Mr. Basudev to please come on stage to do the next set of honors. Let's put our hands together, everybody. I request sir to please give the memento first to Professor Padmini Sri Nivasan. A round of applause for her. Next to Mr. Venkat Pillai. A round of applause, please. Thank you so much, Mr. Basudev, for joining in. And now we close the first set of panel discussion. Thanks each and everybody for being so engaging, and we would look forward to step forward to all the panelists to click one photograph